This is Nightly Business Report with Tyler Matheson and Susie Garrett. Brought to you in part by
TheStreet.com, featuring Stephanie Link, who shares her investment strategies, stock picks, and market insights with Action Alerts Plus, the multi-million-dollar portfolio she manages with Jim Cramer. You can learn more at TheStreet.com/NBR.
Music to the market's ears. Stocks rally after the minutes from the last Federal Reserve meeting suggest policymakers are worried about slowing global growth. Could that mean easier money longer?
Ebola economics. The World Bank puts a price tag on the economic cost of the Ebola outbreak, and the number is huge.
And oil slick prices slide again, which is good for consumers, but bad for producers. So what happens as their profits get pinched? All that and more tonight on Nightly Business Report for Wednesday, October 8th.
Good evening, everyone. Well, call it a comeback rally or maybe a Janet Yellen rally. Whatever you call it, stocks had their best session of the year. The major averages surged after minutes from the Federal Reserve's latest meeting showed the central bankers will be, quote, overly cautious about raising interest rates. They cited concerns about weakness in the global economy and the impact of a stronger U.S. dollar, especially on inflation. Investors bought up stocks, reassured that the Fed is committed to keeping rates low until it's convinced the U.S. economy has completely healed. The Dow shot up almost 275 points, erasing all of Tuesday's losses. The Nasdaq rose 83. The S&P soared 33 points. Steve Leisman has more analysis on those Fed minutes.
Global economic weakness in places like France and Germany is starting to be felt here at the Federal Reserve's Washington headquarters, and that could have an effect on interest rates. The Fed in the minutes from its September meeting revealed concerns with floundering economies overseas, saying, quote, economic growth over the medium term might be slower than expected if foreign economic growth came in weaker than anticipated, end quote. That was not the extent of the concerns. They also mentioned the appreciating dollar, which has risen sharply since July. The worry is that a strong dollar will reduce inflation since foreign goods become cheaper in dollar terms when the greenback strengthens. This is troubling to a Fed that has been struggling to hit a 2% inflation target for the past 5 years and not succeeding. In fact, Fed staff economists said the central bank may not hit that target, quote, over the next few years.
The dollar's movement, which reflects divergent monetary policies globally, show the Fed and its forward guidance and its keeping to the timeline on rates is affecting markets, which will affect the economy. Combine that with oil, and you've got a sense the Fed will be worried about inflation being too low. It'll want to pull the punch ball away late, not early.
All of that suggested to the market that Fed officials won't be so quick to pull the trigger and raise interest rates. The market currently anticipates around a mid-2015 rate hike, which would be the first in 8 years. But there was concern of an earlier hike, and the Fed's worries about foreign weakness, it takes that off the table for now. All of this raises the stakes for the European Central Bank and its president, Mario Draghi, to come up with a plan to address the economic weakness on the continent. The ECB currently is putting a program in place to lower rates for private sector borrowers. But it's still in the works, and the Eurozone economies have weakened further since the plan was announced. That could mean the Fed keeps interest rates at zero until it's clear Europe is out of recessionary danger, or Draghi puts a plan together that gains the confidence of markets. For Nightly Business Report, I'm Steve Leisman.
More strong data out today here in the United States. Payroll firm ADP reports that wage growth is finally picking up, with hourly pay for private sector workers up 4.5% in the third quarter compared with a year ago. Also today, the Kansas City Federal Reserve reports more improvement in that region's labor market, with its jobs momentum indicator rising to near historic highs. Small business hiring is among the biggest contributors to the improvement, as well as a decline in the national unemployment rate.
Some good news out of Washington, sort of. The Congressional Budget Office says the federal budget deficit, coming in at just under $500 billion, is actually the lowest it's been since President Obama took office in 2008.
Oil prices continued to slide today, pushed lower by a Department of Energy report that U.S. crude inventories rose by 5 million barrels last week, and that was way above forecasts. Domestic West Texas crude fell another $1.54 a barrel. It finished at $87.31. That's a fresh two-year low. How low can those oil prices go, and how long before oil producers really feel the impact? Jackie DeAngelis has more.
Oil prices have gotten crushed. Good news for consumers because retail gas prices are dropping, but bad news for global producers who are reaching critical break-even points. Now, suppliers around the world forced to decide, are these price fluctuations temporary, or is it time to cut supply? Some are saying not so fast, at least in the Canadian oil sands. A representative for Cenovus says there's no need to panic.
If you look at the overall world supply cost, and right now there's reports that it's in the $70 range. You know, we are in the high 30s to low $40 supply cost range for Cenovus in our two main oil sand facility areas. So we have a lot of value to still generate. We have a lot of running room.
Still, according to some reports, the price to produce out of the Canadian oil sands is $89 to $96 a barrel. Here in the U.S., $70 to $77. So with WTI well under 90 now, some producers are already starting to feel the pinch. And traders saying that there's more pain to come. West Texas Intermediate could fall to $85 in the next couple of days. If that level is breached, the slide could continue. But suppliers aren't making any moves just yet. In Canada, the expectation is that output will continue to ramp, but with the realization that recent growth will begin to trail off.
There is a point where that's actually going to level off when we've reached whatever our maximum daily output could be in economic circumstances, taking into consideration all of the factors of responsible development.
What to watch for? Well, OPEC is meeting next month. The cartel might make a move. Also here in the U.S., we've been talking about oil exports. Perhaps the conversation heats up. For Nightly Business Report, I'm Jackie DeAngelis.
A grim estimate today on the economic impact of the Ebola crisis. The World Bank has calculated the price tag and is predicting it could top $32 billion in West Africa alone by the end of next year. That's if the disease continues to spread. This comes as 5 U.S. airports say that they will screen for Ebola on passengers arriving from West Africa. And on the same day that the first Ebola patient diagnosed here in the U.S., Thomas Eric Duncan died in a Dallas hospital following a long struggle with the virus.
Duncan may have exposed up to 50 people to the Ebola virus in Dallas. So far, none of them have shown signs of illness, but the nation's hospitals and airports are on high alert. It's the fear factor that the World Bank referred to in its report, calling for immediate action in the hardest hit countries, Guinea, Liberia, and Sierra Leone, to stop the epidemic. Doing so would discourage other African countries from closing their borders, grounding airline travel, and choking commercial activity there. World Bank President Jim Kim said today the enormous economic cost of the current outbreak could have been avoided by prudent ongoing investment in health systems. And that's the point Secretary of State John Kerry was trying to make as he confirmed a commitment of resources and dollars by the United States.
Ebola is an urgent global crisis that demands an urgent global response. The United States has intensified every aspect of our engagement, and that includes providing Ebola treatment units, recruiting first responders, and supplying a critical set of medical equipment.
Earlier this week, an NBC News freelance photographer arrived in Omaha, Nebraska for treatment after he tested positive for Ebola while working in Liberia. In the United States, one other patient had been previously treated and released in Omaha, and 3 others, including one who remains hospitalized, have been treated in Atlanta. In Europe, a total of 8 people have been treated. 2 of the 3 in Spain have died. No drugs or vaccines have been approved by the FDA to treat Ebola, and only very limited supplies of the drugs being tested are available. The stock of Chimerix, which makes the drug used by Duncan, dropped today following the announcement of his death. That same drug is also being given to NBC's freelance photographer in Nebraska. But until there's a drug or a vaccine to fight Ebola, the costs of containing it will steadily climb.
John Panzer joins us now to talk more about the World Bank's economic assessment of the Ebola epidemic. He's the director of macroeconomics and fiscal management practice at the World Bank Group, and he's one of the authors of the study we referred to earlier. Sir, welcome. Good to have you with us.
Thank you.
I gather, correct me if I'm wrong, that much of the cost that you describe under a kind of worst-case scenario, $33 billion, concentrated in West Africa, is traceable to what you describe as the aversion behavior that people would engage in those economies. In other words, the economy fundamentally shuts down as people shutter factories, don't travel there, are afraid to do business in those nations. Could that aversion behavior lead to the collapse of those countries?
Yes. In some ways, this crisis is not contained in the very short term. We can anticipate an enormous cost for these countries. Right now, for these countries, we estimate that for 2015, the price cost would be about $800 million if this crisis is not contained. This is a very significant amount of money for economies that in total have a GDP of $12 billion.
John, you also write in your report that you have two scenarios. There's the high Ebola and low Ebola, and that has a factor in this price tag that you've put on the cost of the Ebola crisis. Talk us through the high and low scenarios.
Well, I think the most scary scenario is the high case scenario, in which if the crisis is not contained in these three countries, there's a very likely probability that Ebola will spread to neighboring countries or to other countries in the world as we see now. But of course, the most vulnerable countries for the spread of the disease are the neighboring countries, because they are the most connected and also because they have health systems that will be very stretched to cope with the disease. In that context, if aversion behavior moves into the broader Western Africa region, you have to consider that just the economy of Nigeria is 40 times larger than the economy of these three countries combined. So if this crisis would evolve into other countries and would lead to aversion behavior across other Western African economies, we could estimate then a very high cost in terms of lower economic growth, which transmits into that $33 billion over 2014 and 15 that you referred to.
That's what I was going to ask you, because you earlier cited a number of something like $800 million, which is staggering in its own right. But I was going to ask you how we get to that 33 billion that is sort of the headline number that people are throwing around today. And it is reduced economic output. This is mostly West Africa. What happens if this disease moves more broadly global? How does that lever up the potential cost?
I think that in that case, we have to consider whether this is going to lead or not to aversion behavior. At the beginning of the program, you said the cost of this, of treating the disease and of treating the patients and isolating them is significant, but it's not staggering in terms of the broader economy. However, if aversion behavior moves to any country, then the cost could escalate enormously. Take a developed country. We think that in places like the United States or Europe, where you have very strong security and health systems to contain the crisis, you will have a price tag, but if you avoid aversion behavior, the economic costs will be very contained, of course.
All right, Mr. Panzer, thank you very much. We'll, of course, be watching this story, as will you, over the months ahead. John Panzer of the World Bank.
Still ahead, Alcoa's surprise for investors and the one key takeaway from its earnings report that shareholders need to pay attention to. That's next. It's not the kind of money Bill Gross might be used to, but it is a start. After suddenly resigning from running the $200 billion Pimco Total Return Fund last month, Bill Gross joined Janus Capital Group to run its rather modest $13 million Janus Unconstrained Bond Fund. Today, we learned that investors moved more than $66 million into that fund after Gross came on board. By contrast, investors pulled out more than $23 billion from Gross's former fund at Pimco.
Turning now to earnings and a strong beat tonight from Alcoa, the Pittsburgh-based aluminum giant. Alcoa made 31 cents a share, excluding certain accounting items. That was 8 cents better than estimates. Revenues also topped Wall Street forecasts by nearly $500 million on strong demand for aluminum and the aluminum products the company manufactures for automakers, the aerospace industry, other businesses. And CEO Klaus Kleinfeld is satisfied with the results.
In this quarter, I mean, we won record sales. I mean, coming in 2 large contracts, each one over $1 billion. One coming from Pratt & Whitney, basically for engine materials, and the other one coming from Boeing, again, $1 billion plus. I mean, it's very clear aluminum is there to stay in aerospace, and it's growing in places like automotive and in others.
Well, shares of the one-time Dow component rose initially in after-hours trading, as you see on that chart. Morgan Brennan joins us now with more on Alcoa's earnings. What, Morgan, is the one big takeaway here from this report?
Well, I think what Klaus just mentioned, the fact that we're seeing this larger transition for Alcoa into advanced manufacturing, something we've talked about on this program before, certainly played out in these results. But I think one of the more surprising takeaways from these earnings is actually its upstream business, its mining and smelting operations, the actual production of aluminum. We saw a really strong beat there in this earnings report, and that's interesting because we've seen aluminum production just was hit so hard in the recession. It's really floundered since then, both for Alcoa and other aluminum makers, and yet in these earnings, we saw the strongest performance for the primary metals segment since before the downturn, and I think at a time when investors are really worrying about slowing growth in China, Europe teetering on the edge of recession, to see stronger output for actual aluminum production is a very promising stat, especially in light of the fact that the company reiterated its 7% global growth demand outlook for aluminum.
They've been sticking to that number for the last couple of quarters.
They have been. It's very promising for a larger economic growth.
Morgan, thanks very much. Morgan Brennan reporting.
The 18-month turnaround at JCPenney suddenly hitting the brakes, and that's where we begin tonight's market focus. Shares of the retailer tumbled 6% today after warning that sales last month were weaker than expected, and it cut its outlook for a key sales measure for the current quarter. JCP lost $1 a share to $8.19. More trouble for another struggling retailer. This one is Sears. A report out today said at least one vendor is halting shipments to the department store chain because it couldn't obtain insurance to guarantee it would be paid for its products. The report said 3 of the biggest insurance firms are reducing their coverage. Sears calls the report misleading. Still, shares fell nearly 5%, down $1.45 a share to end the session at $28.85. And a different story for warehouse club Costco. It posted fourth quarter net income of nearly $1.6 billion. That's a jump of 14%. The chain added more paying members and sold more food, clothing, and school supplies during the important back-to-school season. Shares hit an all-time high today, adding $3.46 a share to $128.73. Then, after the closing bell, Gap shares tumbled on news that CEO Glenn Murphy will step down next year. Murphy had overseen a reversal in the retailer's long-running sales slump. He'll be replaced by the head of Gap's digital division. The stock initially fell about 8% in after-hours trading, but it rose more than 1.5% during the regular session to $41.90.
Monsanto reported a narrower-than-expected fourth-quarter loss, but its full-year forecast disappointed investors. The world's largest seed company says wheat grain prices will likely pressure farmers to change their planting schedules and tighten up spending on farm supplies. Despite that, though, the company outlined plans for growth and plans to plant some seeds in other businesses by making some new investments. Investors liked hearing that. Shares were up $1.99 apiece. They closed at $109.73. Valiant Pharmaceuticals and activist investor Bill Ackman plan to increase their offer for Allergan. This, according to reports, the sweetened bid could value the Botox maker at more than $56 billion. That's a $4.5 billion boost. The move is designed to keep Allergan from striking a rival deal. Shares of Allergan up $4.30 each to close at $190.50. Valiant up 0.5%. It finished at $125.90. And AT&T has agreed to pay more than $100 million, most of that going to consumer refunds, to settle allegations that it added bogus third-party charges to cell phone bills, like daily horoscopes or trivia that were never requested. The enforcement action for this so-called cramming is the largest in the history of the Federal Communications Commission. AT&T shares up, though, nearly 1% to $33.15.
Citigroup is gearing up to spin off its subprime lending unit, One Main Financial, which makes personal loans to consumers with less than pristine credit, is preparing a $50 million initial public stock offering. Citigroup has tried but failed to sell the business before and now says One Main no longer fits with its strategy of catering to higher income customers.
Switching now to politics, with under 4 weeks to go before the midterm elections, and the focus now is on Kansas and what some pundits consider to be the most important race in the country, one that could determine whether Republicans will take control of the U.S. Senate. John Harwood joins us now from Wichita with more on this important battleground. John, first off, tell us who's running and why is this Kansas Senate race in a state that is usually so reliably Republican at the center of the fall campaign?
It's fascinating, Tyler. Who's running is Pat Roberts, a veteran Republican in a state that has only elected Republican senators for 80 years. But he's 78 years old. He's been in Washington for a long time. Washington is unpopular. And a former Democrat, now running as an independent, successful businessman with a lot of money, is running an independent candidacy, basically saying both parties are bad. The Democrat dropped out, which means that Greg Orman, the businessman, is getting those Democratic votes, and it's a very unpredictable situation.
So you mentioned that he's a businessman. Where do the candidates stand on business issues, whether we're talking about taxes and regulation? How different are they?
Well, very hard to tell right now, Susie. They had a debate today before a business group outside of Kansas City, and they sounded similar notes. Greg Orman said, oh, I don't like excessive regulation. So did Pat Roberts. Neither one embraced higher taxes, for example. Both of them said Obamacare needed to be changed, although Orman said it's not practical to repeal it. Roberts said, I'll keep trying. The real difference is that Roberts was saying, if you elect this guy, telling fellow conservative Kansans, if you elect this guy, you're turning over the agenda to Barack Obama and Harry Reid. And Greg Orman said instead, no, I'm going to try to make Washington work because both parties are at fault.
So, John, what is the latest information on who's ahead?
Pat Roberts is trailing by a few points, but he and the chamber have come in with big negative ads trying to define Greg Orman as a Democrat in disguise right now, and therefore they're hoping they can overcome this lead in the last 3 weeks. Not clear that they can do it, but we'll find out over the next 27 days.
All right, John Harwood, thanks very much, John, reporting tonight from Wichita. And coming up, is IBM one step closer to making money off its supercomputer Watson? Could this be the new revenue generator IBM has been looking for? You may remember Watson, the supercomputer made by IBM that made headlines a few years ago. Well, now, Big Blue is betting big on Watson with a new home and some new applications. Bob Pisani reports.
Remember IBM's Watson? That's the artificial intelligence program that defeated the Jeopardy champions. Not much has been heard from it, but today IBM opened a brand new headquarters for Watson in downtown New York, surrounded by Google and other hip companies. Why the move? IBM is finally rolling out new applications for Watson, and it wants to attract all those young, hip downtown developers to write apps for it. Several deals were announced today. Terry Jones, the founder of Travelocity and the founding chairman of Kayak.com, launched Wayblazer. It's a new travel company built on Watson that will allow travel agents and consumers to interact with Watson using a natural language interface. So consumers and travel professionals will be able to talk naturally with Wayblazer about travel plans, and it will make recommendations on flights and hotels and places and destinations. It's all part of a very hot area of technology called cognitive computing. It's something like artificial intelligence. Cognitive computers don't think by themselves, but they're capable of learning. They can adopt to new information, they can interact, and they can propose solutions. And the technology is getting better very fast. Another use Watson is being tested for is as an aid to doctors to more quickly and accurately make diagnoses. Watson is designed to interact with the patient's medical history, as well as information from the doctor's medical exam. So if a patient comes in with a difficult diagnosis, the doctor could query Watson, which would compare the symptoms against a vast body of medical knowledge to produce a series of possible diagnoses. This is very valuable when dealing with rare diseases where the doctor is likely to have little knowledge of the disease or its symptoms. Now, one thing is for sure, IBM desperately needs a revenue generator. Revenues have declined every year since 2011. IBM won't discuss how much revenue Watson might generate, but they obviously have big hopes. Consulting firm Deloitte estimates that the total market for cognitive computing could exceed $50 billion in less than 5 years. That's a huge leap forward for this particular business. Now, everyone has always asked me the question, what does Watson look like? And the answer is, well, it looks like a pizza box. Actually, it's about the size of 3 large pizza boxes. Of course, no one is going to deliver Watson. It's going to be available as a service in the cloud. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
One smart pizza box. And finally tonight, Americans are living longer with life expectancy now the highest ever. A new report from the CDC finds that a baby born in 2012 can expect to live nearly 79 years on average, about a month longer than a baby born just the previous year. Thanks to advanced treatment and prevention of major diseases, women can now expect to live longer than men, to more than 81 years compared to 76.5 years for men. Tyler, you and I are going to hit 100.
We're going to be there.
We're
going to still be anchoring.
That's Nightly Business Report for tonight. I'm Susie Garrow. Thanks for being with us.
And I'm Tyler Matheson. Have a great evening, everybody. Thanks for joining us. We'll see you back here tomorrow.
Nightly Business Report has been brought to you in part by
TheStreet.com, featuring Stephanie Link, who shares her investment strategies, stock picks, and market insights with Action Alerts Plus, the multi-million-dollar portfolio she manages with Jim Cramer. You can learn more at TheStreet.com/NBR.
I'm Susie Garrett with a Nightly Business Report news brief. Stocks on Wall Street today had their best session of the year. Investors were encouraged to buy after minutes from the Federal Reserve's latest meeting showed the central bank will be overly cautious about raising interest rates due to weakness in the global economy and the impact of a stronger U.S. dollar. The Dow shot up almost 275 points. The Nasdaq rose 83. The S&P soared 33 points. Alcoa kicked off the new earnings season with profits jumping more than expected thanks to huge demand for aluminum. The World Bank estimates the economic cost of Ebola could top $32 billion unless it's contained. And the EPA says new cars and trucks are more fuel efficient, averaging 24 miles a gallon, the highest ever. Be sure to tune into Nightly Business Report right here on your public television station.